welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday the 5th of October 2016 and we're briefly looking at signs which indicate a possibly disappointing non-farm payroll report on Friday. Private sector employment slowed a little in September according to data released this morning. According to Automatic Data Processing Inc., employers added 154,000 private sector jobs last month, down from 175,000 in August. This is the smallest increase since April. This increase was below expectations. Economists polled by Econoday had forecast a September gain of 170,000 jobs, compared with an original estimate of 177,000 for August. It shows that small private sector businesses added 34,000 jobs in September, medium businesses added 56,000 jobs, and large businesses added 64,000 jobs. Most of those gains were in the service sector. 151,000 jobs added there, compared with 3,000 for goods and producers. This was supported by a report from the Institute of Supply Management, which showed activity in the US services sector witnessing a big rebound in September, after having slowed to more than a 6-year low in the previous month. Manufacturing, however, lost 6,000 jobs in September. Mark Zandi, chief economist of Moody's Analytics, which prepares the report using ADP's data, said, quote, "Job growth should be expected to slow as the US nears full employment," unquote. While analysts said the figure does not necessarily track the non-farm payrolls report due on Friday, any change in momentum for the ADP data could be significant. Economists polled by MarketWatch expect the government's report for September to show that non-farm payroll accelerated to 169,000 jobs, a little better than 151,000 in the prior month. However, we suspect that the market sense the jobs data will be disappointing on Friday, as Wall Street rose after 2 days of losses, partly because of the report and after a surge in oil prices helped the energy sector. Oil prices rose above $52 today, with Brent crude closing at $51.76 and US crude at $49.83, a level not seen since June, after data showed a bigger than expected drop in US crude inventories. Disappointing labour figures will mean a delay of any rise in interest rates, and that is positive for stock markets. So what about gold and silver, we hear you ask? Well, our thoughts are that current prices offer good value if you are light in your portfolio. If you have plenty, then perhaps it's worth waiting for the results in case we're wrong and they are better than expected and gold and silver prices fall further. However, we believe at best they will be neutral or disappointing, and that should support gold and silver prices, which we see rising in any case as the election in November looms. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views